Hello traders, how are you? Vladimir here from Traders Academy Club. Welcome to the weekly forecast, the market outlook, analysis, and also a review of the previous week and the trading ideas we've had. For today, I have two great opportunities to share with you. That's the pound yen and the New Zealand dollar. But before we go to the charts, if you are new to this channel, welcome to our amazing community. Please subscribe to the channel with the subscribe button below the video. Just remember to enable the notification there. And also I invite you to join us in our trading family, Traders Academy Club. Enjoy, as you can see on this image, your access to our free full VIP price action course. Enjoy our real-time trading education and real-time trading ideas. Every single trading idea comes with a detailed, dedicated video explaining the exact techniques standing behind it. Join our family with the link below this video in the description. And now to the pound yen and the New Zealand dollar. But as I said before, I want quickly to review the previous week. So we were talking about the Euro pound and the Aussie Kiwi, which also, of course, if you enjoy this video and the other videos and the opportunities I share with you, please show your support back. Hit this little like button below the video. Feel free to share this video with anyone who you believe can benefit by watching that. And also a little feedback in the comment section will be very much appreciated. This is how YouTube algorithm works. So thank you very much in advance. I also would like to remind you that if there is any specific instrument you want me to share with you my view, let me know in the comment section. And if I have something to share, of course, on this instrument, I'll be more than happy to do so. And before, the last one before we start, these two indicators, as you can see on this chart, the key trading level indicator and my virtual trading pen, are both available for you for a download, absolutely free. Just follow the links to that KTL indicator and virtual trading pen. Okay, below this video in the description, you can find the direct links to that, or you can find it also in my blog. Just go here to my strategies and courses, in-house indicators, and you would see here a full list. Okay, and the key trading level indicators and the virtual trading pen, they both available for you for free. So now let's begin. The Euro pound, our view the previous week was by these dips. We got a rally by the market, which reached the very, let me just show you here, a very powerful zone here of the highs. I wanted to see the next highs being retested. The buyers didn't really have this power with the breakout to carry the momentum, and it blocked with the bearish divergence. As you can see here, higher highs on the chart, but lower highs on the moving average of the MACD. This is a sign always to step back if you are involved. The way it behaves right now, I would expect to see some deeper correction, very likely to this zone here of the next volume area, or even slightly lower, before anything further would be defined and built for this pair. And the next one we were looking at was the Aussie Kiwi, where my anticipation is that we go down and buy the dips. So far, it's pretty much the same plan. Only one thing to pay attention to. Right now, since this high not yet was broken, there is a chance we will see some deeper correction. So something like that. This is a possibility. Of course, we can't predict the price. It doesn't change the bullish view. It just changed the shorter term waves, the way it could develop. So I do believe this is some slowdown. If it breaks down just to complete the second corrective leg before the rallies, if it breaks up, then I would just expect to see the further continuation towards, as explained on the previous week video. And if you missed that, you can find the direct video, of course, in the channel and watch it, or not or sorry, to the next highs for the longer run all the way to here. So we will see how this one works out. My longer term bullish view remains on. Just one thing to pay attention to is, as I said, this range. It's a possible scenario since the first leg down is 3 lower highs, lower lows. So this range is definitely a possible scenario before we take over to the next step. Which brings me to today's, for this week. Two pairs, as I said, pound yen and the Kiwi dollar. Let's start with the Kiwi dollar. So what do we have on these instruments? Why does it catch my eye? And is that really a long-term turnaround here? So first of all, I don't think so. I think this is still a short-term pullback before we would see one more dive. Ideally, I want to see the price going back to this consolidation from the weekly. So something like that. That would be a classical scenario from my point of view. And also, if we take a look on the chart and the price, what is the structure we currently have? Absolutely bearish. Lower highs, lower lows. Now also the supportive line been broken. There is nothing bullish with this one for the long run. So I believe that after some pullback, we should be experiencing yet further continuation down. And the reason I am looking for the short-term pullback is because we are currently retesting this very important weekly level. Why this level is so important? As we've had the structure to the downside, which then flipped to the upside. This was the last low that was not yet tested, and it is there right now. Also, this was a resistance, now becomes a support. So when we take that into consideration, let's go to the daily chart. On the daily chart, we have a ride on the lower Bollinger Band without any pullback, and we can start to see the slowdown on the MACD histogram, just a slowdown, lower lows on the chart, higher lows on the indicator, RSI dancing around the oversold area as well. I think this puts the pressure for some short-term correction to start and to build up. And ideally, I want to see this pullback taking place, some hidden divergence building up here, lower highs on the chart, higher highs on the histogram, and then look for the further sell. So to enjoy the short-term buys, here we are on the 4-hour chart, and at the end of these 3 waves, we are building a bullish divergence. So it's right here. Okay. The classical scenario, of course, would be the break of this high and pullback and the deeper correction, ideally towards this zone. However, by the way it looks on the 1-hour chart already, so what happens here is we flipped, right? Here, low, high, low, bullish divergence, and now we flip upside. And look what happens here. It starts to go and to try to place itself above the resistance, right here, which now behaves as support, and this support, which now behaves as resistance. So if the price managed by the start of the week, managed to place itself above it, I believe this is a good sign for a possible beginning of the wavings upside. Short-term correction heading towards the volume zone on the 4-hour and daily here, and then possibly all the way to the next important high. Let me show you, let me just draw it with my pen here so you can see how that looks like. Now, one of the great, as I said before, this is a free indicator for you. Go to the link below the video in the description, download it there, and look at this. These are the levels. This is the first one, okay? And then if we manage to get here, that's where I would expect to see lower highs the chart, higher highs on the indicator, and very possible next sell-off. So this is the first one, New Zealand dollar. Let me know, what do you think about this pair? Would you buy? How would you expect this one to play? Let me know in the comment section below. What's your view there? And the last one for today, pound yen, which is, from my point of view, a potential beast, both short-term and a long-term, and I will explain. On the long-term, we have a massive rally here. It's just wrong drawing, sorry. massive rally here. It comes to the end with a moving average divergence there and RSI divergence as well. And look at that. Massive rally. Each candle gains more and more momentum. Bearish control. Going down to the daily chart, we did experience already 2 waves down. But the daily shows a bullish hidden divergence. So if we take this wavings to the upside, we have here higher lows on the chart and lower lows on the indicator. Now that contradicts the weekly chart, right? So this is why I believe we should look at this volume, okay, and look at this supportive zone. See that? Resistance that was broken, now retested. Resistance that is broken, now retested. And the volume zone. Absolutely amazing area. And I think we should be building something like that. So 2 waves down, 2 waves up to complete a zigzag, and then a move down. And if we take a look on the 4-hour chart, we have here a beautiful bullish divergence on the moving average of the MACD. Okay, so look at this volume, which is likely to be retested, and the next one is slightly higher around these key highs. So I believe we are heading towards this zone, ideally towards the next one as well, before we take the strong move to the downside. And the way it looks on the 1-hour chart, we are now shifting low, high, low, and upside. 3 higher highs, higher lows in play. So with the pullback, I would be looking for possible buys towards the mentioned zone before. For me, this is the zone of invalidation. As long as the price does not go below and holds below, I would be looking to buy the dips with some good bullish signs. So these are my 2 instruments I wanted to share with you. Let me know, what do you think about them? I find them very interesting. Do you? Share with me your inputs in the comment section below the video. Thank you very much for your time watching this one once again. I wish you and yours all the best. And once again, I invite you to join us in our trading family, Traders Academy Club. Enjoy the best of the value we have to offer here. VIP price action course, real-time trading education, real-time trading opportunities delivered to you with detailed, dedicated video explaining the exact techniques behind it. Join our family with the link below this video in the description. And once again, thank you for your time. Best to you and yours. I'll see you soon with more. Bye for now.